Hey everyone, Andy Moss here, tradingadventures.com with your Tuesday market update. Happy St. Patty's Day to all. It's March 17th. And this update is going to be really pretty brief because not much has changed. We're looking at the roadmap here of the stock index futures, and we can see there's a little bit of a shift here, a little bit of a bounce, but prices are back over still declining 5-day moving averages here across the board, with the IWM probably being the closest to that level. Let me show you the ETF version here just for reference. These are 30-minute candles on the SPYs, just trickling lower here after a bit of a bounce this morning, back over a declining 5-day. Same with the Qs, same across the board. So really, if you watch the weekly charts over the weekend, the main message hasn't really changed. It was go slow, do less, be patient. And while we've got a potential transition building here, we're not out of the woods yet. Yes, there's a higher high and higher lows on the 30-minute time frame, on this short-term time frame. But we've still got a long way to go. Let's go look at the daily charts here for a minute. And here's SPY. You can see here's the bounce. That was Friday's lows. And we're back up to this anchor off of the August dip. We're right here at a sharply declining 8-day moving average. We've still got the 21-day way up here and the 50 well above that. On the Qs, it's a similar situation. Back to the anchor from the August low. A little above declining 8-day, and the 21-day here is much closer in price because the Qs have been chopping around here so much. But we're not over them yet, and neither of them are sloping higher. DIA, you guessed it, same situation. IWM, same situation. Steeply declining 8-day moving average, 21-day and the 50-day are way up here. This pink line is the year-to-date anchor, by the way, and this orange line here is not the anchor off the August low, it's the anchor off the November low. If we want to throw the August low back on here, we can do that real quickly and just put it right there and show that that's kind of the area we're getting a bit of a bounce here on the small caps. So again, on the major stock market indices, it's a potential transition area, but it's not out of the woods. We've still got a long way to go there. On Bitcoin, coming up a bit and trying to look a little better. It does have a rising 8 and 21-day, the blue and the yellow line here. So I should say this: the blue is the 21, the 8-day is the yellow line there. It bounced lower off of this anchor from the January high a couple of times, and then it got back over, and where did it stop so far? Right here at the year-to-date anchored VWAP. So you can see that illustrated very cleanly over here on the 30-minute chart. So Bitcoin is trying, but it's not changed yet. This is still a bounce in a downtrend, even within the context of a very short-term uptrend there on Bitcoin. So across the board there, just to go back to the roadmap chart here, it doesn't mean that the market is suddenly healthy again. It doesn't necessarily mean that the worst is behind us. It means that, once again, we're in a potential transition area. We still have the same bigger issues we talked about on Saturday with the damage beneath the surface. We've got weaker participation and a more cautious overall tone, and that takes a little more time to turn around, more than just a Monday and a Tuesday, maybe even more than just a week or two. And on top of all that, we have the Federal Reserve tomorrow. They're going to make an interest rate decision, an announcement, and so this is not a spot where I think there's a lot of edge in jumping to or making any kind of big conclusions. So I'll say it one more time. The message is the same: go slow, stay patient, let the next move prove itself. We've got a lot more price action needs to be seen before we have a real meaningful turnaround. So I'll keep the updates coming, even if there's little to change and little to update. That's what I see. And back with more on Thursday.